This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion.
Morgan Stanley, one of the two investment banks, the other being Goldman Sachs, that was saved in the fall of 2008 by the Fed and the other powers that be. Morgan Stanley and Goldman Sachs were going the way of Bear Stearns and Lehman Brothers. Everyone knows it. And then the magic hand stepped in and saved those two particular investment banks. That's a really shitty, non-capitalistic system. We can all agree. Because if you or I put our capital at play and we do bad, we mess up, we lose, we're not getting a fucking bailout. So let me give you an example of what happens when you give a bailout to a shitty investment bank 14 years later. Just one example. Carvana, the used car bullshit company that is now imploded. Morgan Stanley, via an analyst named Adam Jonas, recommended on February 26th, 2021, that Carvana had a price target of $420, currently trading at February 26th, 2021 at $283. So at that point in time, one of Morgan Stanley's magical analysts predicted that the $283 Carvana would go to $420. Roll forward 13 months, March of 2022, that target dropped to $360. Well, the price had already dropped too, because in March of 2022, March 3rd in particular, Carvana was trading at $123. That was a drop in 13 months from $283. But Morgan Stanley still had a target on Carvana of $360. Now here we go. We roll forward to November 4th, 2022. 6 or 7 months later? Carvana is now at $8.76. The Morgan Stanley target is not available. The worst case bearish target that Morgan Stanley is offering, 10 cents. Wow. In what, a year and a half? Their target has gone from $420 to perhaps 10 cents. Now let me read some of these great lines from some of these analyst reports. Coming in back in February 2021, when the target was $420, Morgan Stanley believed that Carvana was uniquely positioned to serve an automotive and transportation TAM that goes far beyond the used car market. The report went on to say, in our opinion, describing Carvana as just a used car dealer is like describing Amazon nearly 2 decades ago as just an online bookseller. Now, mind you, that was written when Carvana was trading in February of 2021 at $283. It's currently a little less than $9, apparently headed towards zero. Now, rolling forward to March of 2022 to read a little more of the analysis 13 months after, we expect Carvana to become the next Amazon. And with the price having dropped from $283 to $123, Mr. Jonas said, we think the market is too bearish. Carvana is a best-in-class auto retailer. The report goes on to say it has sufficient liquidity. And in the fine print, Mr. Jonas says, we pound the table on Carvana right now and see it as offering one of the strongest bull-bear skews of any stock under our coverage. Man, if I'm John Q. Public, I'm sitting out there and I'm saying, my God, I need to get a piece of this Carvana. Even though the chart is straight fucking down, let me buy some more Vana. Now, mind you, if you don't know about this Carvana, essentially, used car Wonderland. selling used cars at a vending machines. No joke. Go look at the pictures on Google Images. Now, I knew something was up about a year or so ago. I was not familiar with Carvana. I had no money in it. But I had some relatives that were telling me that they had used cars for 4 or 5 years, and people were coming to them paying them a premium 4 or 5 years later for their used car. $10,000 more than they paid for it. Stuff like that. Crazy stuff. Now, of course, we're in the middle of the Fed handing out the continued QE, the U.S. government sending checks to everyone, the economy shut down, all kinds of crazy stuff happening, which we can, of course, now see for what it was, a big fucking scam. Am I the only person that's having feelings, time travel feelings, about all the characters that came out after the dot-com bubble, all the scams that rolled out, starting with long-term capital management, pets.com, all that kind of crazy shit that happened 98, 99, 2000. Feels like we're going to have a repeat of that. And of course, I think we can see with Carvana, the repeat is already on. Now, just to give a little bit of color from their last write-up, which was November 4th, 2022, just the other day, the report says funding outcomes uncertain, removing rating and price target, material exhaustion of cash, best case scenario, $1 to $40, the bear case, 10 cents. And in the fine print, it says if it survives, it's still only $1. Now, before you start to think I really care about this guy, Adam Jonas, or I really care about Morgan Stanley, or I care about Carvana, I don't care at all. Regardless of the intensity of my voice, the intensity of my criticism, the amount of F-bombs I drop, the amount of shits that I drop, I don't care. I really don't care about these people, this company at all. What I care about is the big scam. Because now the Band-Aid is being ripped off. We all knew March of 2009 that something funny happened. And that something funny went all the way up until essentially March of 2020. And then they did something even funnier starting March of 2020 that is concluding as we speak. Meaning, now that inflation is high, now that rates have to go up, the box is not the same box that we saw with the rate cycle at the end of the dot-com bubble or during the Big Short time period. We did not have inflation then. We have inflation now. And here we are, watching it all implode. And when I say watching it all implode, of course, not all markets have imploded yet. That's not what I mean. What I mean, it's the implosion, once again, of fundamental analysis. The implosion of news and market analysis and price projections, price predictions. I mean, I'm staring at a Carvana chart on my screen. It is nothing but a trend-following short chart. For somebody, this guy Adam Jonas, to still be promoting a company that's dropped from $283 to $123 within 13 months and still having these insane price targets, you've got to know deep in your bones, even if you're not a finance person, even if you're not an econ person, you're not a trading person, you're not an investing person, or maybe you are. This is a fucking scam. This is shit. This is a shitty system designed to rip people off. Go read about the owners of Carvana. Yeah. Go read about how they cashed out billions of their stock when it was at those huge highs. Now, who were the people getting suckered? I don't know. Average Joes? Pension funds? The morons that run these pension funds? But I want to keep pulling myself back, not to get caught up in the micro, because it's the macro here. It's the big picture. All of this shit is getting exposed. It's on the table. You can see it. Now what? Now what? Are you going to go back to trusting this crap? Are you going to turn around and listen to Morgan Stanley again? Or Goldman Sachs? Or any of them? Seriously? Are you brain fucking dead? What is wrong with you? Man, I'm pretty intense today. But when you sit here and you look at a Carvana chart, and I'm staring at these 3 Morgan Stanley headlines for these 3 different dates, 2021, 2022, and late 2022, and to look at this language, to realize how wealthy this company is, I enjoy giving people an alternative. My world is an alternative because trend following doesn't deal with any of this crap. Trend following doesn't force you to be in a position to listen to an Adam Jonas. I'm not an Adam Jonas. I'm just a guy that is showing you a philosophical way to think, a trading strategy way to think. I'm not giving you a price prediction. Anyone that gives you a price prediction is a son of a bitch. They're a son of a bitch and you know it. You know deep down. But hey, people love playing the lottery. So look, I'm not here to try and convert you. Just a little bit. But no, really, I don't wake up each day and say, God, I got to convert people. But what I try to do is give an honest alternative perspective. So for those people that maybe were in the middle of this Carvana nonsense, they say to themselves, damn, I need something else. I need something else I can believe in. I've got to get out of this system. Trend following offers that. Trend following throws away all of the, and we would have called this guy, Adam Jonas, a tipster years ago, right? Now they gussy it up with all kinds of reports and other kind of crap, but he's just giving hot tips. That's all it is. I don't care what his research is. Obviously, his research was wrong. Now, the question you got to ask yourself also, was it wrong because he was an idiot? Or was it wrong on purpose? Hell if I know. Adam, if you're listening, I'd love to have you on my podcast. You can defend all this stuff. I don't think you will, but damn, the invite's there. But let's face it, if I do have fundamental analysts on my podcast from investment banks like Goldman Sachs and Morgan Stanley, they're going to be highly educated. They can talk. They can probably defend themselves out of a wet paper bag. That's where it's on you. You have to figure it out. Because if you're trusting this stuff going forward, what's wrong with you? Are you a masochist? Do you like sticking knives in your nose? Do you like beating yourself up? And no, my opinion doesn't change if all of a sudden the Fed is able to institute another form of QE to make markets levitate like they have twice in the last 20 years. Rates are clearly going up, and I can think back to a line in one of John W. Henry's research pieces. And it was him talking in his speech. John Henry, who owns the Boston Red Sox, owns the Liverpool football team, who made all of his money to buy those teams with trend following trading. He had a comment about the Fed, and I'm paraphrasing, but it was to the effect of when the Fed raises rates, they don't go up, down, up, down, up, down. They go up, 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 down, 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 down. It was a very simple analysis. And I know he wasn't trading off that analysis. It was just his observation of how the Fed handles itself. But it stuck with me for all these years. So if you're sitting around right now waiting for the, quote, Fed pivot, which essentially is to go right back into the arms of a Morgan Stanley analyst who's going to tell you this kind of crap. If you're waiting for the Fed pivot, is that smart? Is that mathematically smart? Is it statistically smart? Or would you be better off saying, I don't know when a pivot's going to happen. I don't know what's going to happen. I don't know what the Fed's going to do. But I'm going to follow trends up and down. That's what I'm going to do. Great example. Somebody who's been covered in several of my books. I've mentioned him on this podcast several times this year. Paul Mulvaney, trend following trader, at the close of October was up 135% on his trend following account in 2022. Now, a lot of people might hear that, and I'm bringing up Paul on top of all this other chaos that we can see with a Morgan Stanley Carvana example, which of course is going to be seen across all of the banks, all of the analysts. I shouldn't just pick on Carvana, but this is such a classic one. But it's going to be everywhere. So across that backdrop, I'm giving you the trend following proof, the trend following performance proof with Paul Mulvaney as an example, 135% at the end of October 2022. Now, what's interesting about that is a lot of people might hear that and say to themselves, oh my God, I don't want that much return. That's dangerous. He must have been taking insane risks. Nobody makes that much money without being a riverboat gambler. Here's where you get it wrong. Mulvaney hasn't made all that trend following performance because of insanely high risk choices on his part. He's got the performance because the opportunity in 2022 has been insane. Like, for example, Carvana opportunity. While this guy was telling everybody to buy the thing while it's dropping like a stone, a classic trend following short, guys like Mulvaney are just saying, and look, this is happening across everything, especially interest rate bonds. Oh my God, like the biggest collapse in bond prices since the 1920s. So a guy like Mulvaney makes that money not from massive risk, not from massive leveraging. He makes that money because the shit is hitting the fan. The opportunity has been off the chart. And he never had a price prediction. He never tried to project any of the markets that he's trading. He simply followed along, reacting to price movements. And if you do that consistently, you have a chance that when the world starts to look like, oh my God, this is an epic disaster, trend line gives you a chance to protect your capital and make more. I don't know why you guys do this. I don't know why you're in this. But the idea is to make money. The idea is to have enough money that when something happens, something unexpected, you have more flexibility to maneuver. And you also have more money if you want to have a little fun too. But the choice for you, and you can see this across this podcast, you can see this across my coming up soon 8th book. The choice is this scam world of investment banks, etc., giving you all of this analysis from smart people, or you can just say, fuck all that, I'm going to follow the price. And if you say, fuck all that, I'm going to follow the price and act like a trend following trader, I will guarantee you that at the end of a lifetime, you will smile a lot more.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.